Good evening, everybody. This is Johnny Seville. This is your executive summary for stock setups for the 27th of October. Let's have a quick look at some updates. Now, today in Trading Room, we talked about the S&P 500 obviously has been in this upward channel, and we're just seeming to break down. Now, open range was set on Friday, October 21st. The low was 2130. So you can see that we're basically just teetering on that lower end of the support. Only 2 days left of that open range bias. As long as we close above 2130 come Monday, then open range has held true. One of my students actually was talking to me earlier today. Thank you, Alex, for those stats. Tested this strategy on Quant Connect, a free backtesting website. And apparently since 2014, it's only open range has only failed 4% of the time. So obviously, we want to listen to it. Now, there's the drop. We're just sitting there, and we will see what happens over the next couple of days. But what the interesting thing was, of course, that we discussed in Trading Room tonight was looking at some of the key levels in the S&P 500. Now, and how the drops have related to the to a key smart money indicator we look at. Now, the smart money indicator we look at is the amount of stocks in the S&P 500 that are above their 50-day moving average or key support versus the levels of the S&P 500 themselves. And so I've written down some key dates here of where we've had major breakdowns or sizable breakdowns at least in the market. So here's the S&P 500. You can see April 2010. We had a nice break. There we go. You can see the break didn't happen till the beginning of May, right? So we'll say May 2010. We'll actually then look at the next one, July 2011. So you can see we come in around here. So when did the break actually occur? We want to see when the actual break occurred. August. So the actual break started in August. We looked at April 2012. Let's go to that. Where are we here? April. There we go. So the break happened actually on the 1st of May. So let's get specific with these dates so you can see the divergence when I show you this later, for those of you who missed the live Trading Room. We'll go to October. When did the breakdown really start to occur? The breakdown started to occur there. All right, which we're looking at end of October. So it's actually November, really November 1st. You can see it's mostly at the beginning of these months, which of course is right around where open range is. We'll go to May 2013. All right, so we saw the top of the market was May 21st. January 2014. There we go. And we can see the drop January 21st. Of course, what does that remind you of? When does the 21st usually occur? 3 weeks into the month, which is options expiration, which of course is open range. So you can see that a lot of these big market breaks are happening after open range is set at the beginning of the month or the third Friday. Anyway, just a little kind of interesting factoid there. Let's have a look at the breakdown there. September 21st. Third week again of 2014. And of course, we're now building once again. We see August 17th. August 17th. Interesting. Let's just have a quick look at that, by the way. What was the open options expiration in August? There you go. Third week, 17th. It started to break down in that third week. All right, interesting. So, okay, let's. And then, of course, we have the top of the market, November 2nd, really started to break down in December 2015. So those are all of our key dates. All right. And what was that? August 2015. All right. So there's our key dates, key market breakdowns that you would have wanted to be short. Now let's compare that to, so that's what the market was telling us. Everything was going up. It was rosy until those days. But let's look at what the smart money was doing. Let's look at what not the stock market was doing, but let's look at what the market of individual stocks was doing. And therefore, we'll go to MMFI, which is a graph of the stocks that are actually above their 50-day moving average compared to the S&P 500. So these are stocks that are in the S&P and whether they're above or below their 50-day average, which is a key support level that many traders, certainly hedge funds, banks, institutions look at as key support and resistance. Now, when we do this, we'll minimize this down, but I want you to look at the levels, and we'll take all this noise off because we don't need it for this type of a chart. Look at the levels of where this was at before the crash. May 2010. Okay, May 2010 the market crashed, but look at when the actual stocks, how many stocks were actually above their 50-day before that happened. By the time May got around, the stocks had already dropped from an 85% level to to about 30% before that crash occurred. We then have August 2011. Okay, that's one actually we may have missed there, but October was another one. But let's go to August 2011. So market crashed in August, but look, yeah, here we go. So, but look at when the actual stocks showed that decline. Stocks above their 50-day moving average dropped sharply in July before the market took a big drop in August, right? Okay, when did the market drop significantly next? May 2012. Well, let's look in February 2012. Let's look in April 2012. Already dropping. As you can see, before the big drop in the S&P, this was already diverging away from the market movement. Okay, market next dropped strongly in November 2012. Look at that. September was the peak. We dropped, and again, the market plummeted as we started to see that divergence away. Let's look at the next one. May 21st, 2013. Okay, when did we peak here? February 2013. Again, by the time May hit, by the time April hit, we had already had this significant drop. So as you can see as we go along, January 2014 we can look over here. Okay, December 2013, we were already diverging. And there you go, big drop. Across this whole time, we'll go to more recently, September 21st, 2014. Okay, in July July until the end of July, massive drop, and then, of course, the market fell apart. If we look more recently, you can see this trend the whole way across. Very interesting to see where the smart money is going. That's one of the key factors we're looking at when, of course, we then compare to the S&P 500, that once again, you can see that the market is at these very, what we feel are propped up levels. We're at these all-time highs, and we look back to the MMFI, which is the stocks above the 50-day average, and you can see that once more we've got that drop from 85, which peaked in April, down to 35. Very similar to what we've seen at each of these peaks in major market meltdowns. There you go, just have a look at that. That level. Every time we've hit that one, crash, crash, crash. What do you think's next? Anyway, might be wrong, but something I definitely wanted you to be aware of. Okay, so having said that, what kind of trades are out there? Well, we've got a couple of new ones that you may be interested for your watch lists. And here's a list of the current ones I'm looking at. Some of the ones we discussed, of course, in the trading room tonight. QSR we discussed. play was already in last night's summary, so we won't go over that one again. QSR, you can see this is part of the restaurant brands. They own Burger King and so forth. They're listed in Canada as well. You can see this looks like a bit of a head and shoulders. So what I'd be waiting for is I'd be looking for a rally up. So right up to this area here. Around, as you can see here, I've got written down, looking to a rally to the 44 area, and therefore we look at the January or April $45 puts. Currently, the $44 puts are kind of where I would play it, and that would therefore be slightly in the money as we drop. The continuation of that head and shoulders would give us probably at least a target coming down to about 39. But we could be even better than that. We could be looking at a full extension of that area, which brings us down to the support line being created beneath around 38. So either way, either way I'd approach that, it's starting to lower the stop level to protect the position as that would drop, hopefully. We've also got DNKN. Now, Dunkin' Donuts, of course, a restaurant play as well, and something that I'm looking at I don't think it's quite ready yet. But again, as I described in the trading room tonight, let's have a look at the technicals. Let's just break down and see what the rules are doing. Firstly, we have the upward channel. In the most recent pattern we can see here is illustrated there. You can see the upward channel. Back and forth, which we've broken down underneath. Taking that away, that's a bearish pattern there. Now, taking that away, we have the rising wedge that formed previously. So we have two short-term patterns, both being bearish. Now, if we look at the measurement, both these patterns are going to give us a similar target, where we measure from the top to the bottom, duplicate that beneath the breakout point, and that gives us a target down here of around 46. Now, when I started to see this line, I started to look for kind of longer-term patterns. And this jumped out all of a sudden. So we take the short-term patterns away, you'll see that we've got a longer-term channel also. Now that channel indicates, there we go, we'll measure it out, indicates a breakdown to 35, 36. So we've got a continuation there, which looks quite exciting. Now, when I started to look at that level, I also looked to see if that correlated with any longer-term patterns, and then we see this trend line coming all the way across that actually appears to connect directly with that. So I'm looking for a breakdown below 45.87, and I think the target could be as much as 35.37, so a significant drop. And if you want to look at a stock that's kind of in this pastry type business as well, you can look at Panera, PNRA, also in the food sector. And when we look at PNRA, you can see once more, what do we have? We have that upward channel breaking down. And there we go. And you can see that's been in a sharp decline. Dropped from 210 to 190. So similar types of movements, similar types of patterns, similar type of industry. So there's a couple of puts that we're looking at. Now, in terms of the longs, I've got one for you to go counter trend. Of course, we love to hedge. So this is one that we're particularly interested in. FCAU. This is Fiat Chrysler Automotives. Now, they have been under a lot of pressure. Obviously, you can see that over the history of this stock, we've come down from some levels of $16 or more. We can go back into, well, we can't go back further than that. But you can see that we've had this previous channel. Now look at where that channel's long-term resistance level stops. Notice also that that is where this short-term channel intersects. Now if we zoom in, you can see that we've broken both at the same time. But look at the volume, 9.78 million. You can see that's down here at the bottom of my chart. I'll point to it there. We go from 2.05, 9.78, 19, 22. We've had 1,000% increased volume by this point. 19 million. The volume is going off the chart. And if we go and bring up volume so you can just see that, you can see this really sharp climb. That's the weekly volume. Let's see if we've got the daily volume on here. I may have taken it off. But either way, that's the main thing that we're looking for. What I want to look at is the Twigs money flow, because that accounts for volume and price action. And look at that, just rocketing up, illustrating that smart money is interested in that from a technical read. Now, this could potentially mean that there is someone, maybe a Chinese buyer, interested in this stock. I mean, we're seeing unusual levels from Stratha, a fundamentalist, thinks that, obviously the owner's been looking for a buyer, I should say, for a while, and these are some pretty low levels. Now, we talked about in Trading Room that if this was a buyout target, we could be looking at areas of $12 plus. From a technical standpoint, it looks like it could have a $9 to $10 target at least as well. So we had a look at the options, and this is what we found. And let's go into the options of FCAU. And we can just use Yahoo Finance for a really quick look. There we go. Now let's go over and have a look at what's happening in the option world. Now, I don't like overexciting anyone. Remember, options does trade great risk, and you can lose all the money you put into it. So make sure that you understand what you're doing, and or talk to a financial advisor before taking action. I just want to show you this idea though. Let's have a look. Look at the November options. $3,597 calls bought today. 3,816 $8 calls bought today. Open interest is 27,976. Can you even see any number close to that? You can see the spread, the $6 puts being sold. Only 23 of those and $1,005 bought. So that looks like there's some spread setting up. Let's look at December. Okay. 28,000, 21,000, 3,445 bought today. Look at the puts. Nothing close to that. Let's go to January. And here we are in January. 1,000, 2,234 bought today. There you go. So we basically think that this is a very interesting possible trade at the $7 calls. We'd be looking at we look at January when I play a little bit of safety there, get a bit of extra time, and they're not too much more expensive. I think you could look at the Decembers. They're about 50 cents, I believe. These are 70 cents, 65, 70. Lots of volume, lots of open interest, and that's probably the way we look to play it. So you could of course look at the Decembers as well, just depending on what your risk tolerance is, or you could go further out. If we go into the March levels. Now we're looking into, again, 63,000 volume at the open interest at the $8 level, and 24,000 again at 7. Something's going on here, folks, I think. So buyout target, technical push, who knows, but I'm going to take a piece of that action tomorrow and take a trade. So those are your trade ideas for tonight. Now, if you liked our trade ideas, we do this every day. So make sure you take advantage of that. This is the last opportunity to enroll in our gold membership for only $9 for 1 month. If you're not an existing member, give us a try for 1 month. $9 to get these videos every day and access to our live trading rooms as well as our daily written stock reports. So that's your opportunity. Get in now while it still lasts. It's a $9, probably the best trade you'll do. So I hope you'll give it a try, and we're looking forward to seeing you all in the next executive summary. Have a wonderful night. Happy trading.